Hey, what's going on, team? It's Ricky with Tactical Solutions. Hope that you guys are all having a good start to your Wednesday today. Friendly reminder, just want to make sure that you guys are aware we have the economic report of the FOMC minutes. We talked a little bit about this yesterday and what this means. It's pretty much just a recap, almost a summary of the previous interest rate hike from the Federal Reserve and who it is and what it is that they agreed to, right? Many of you guys know that the previous interest rate hike was 0.75%. Therefore, based off of the last CPI data report, the Federal Reserve is expected to be less aggressive in the rate that they raise interest rates, which means that the market should therefore continue to go up. And I think this is why we're actually seeing the market go up, not just yesterday, but today as well, right? Understanding that the Federal Reserve can hopefully be less aggressive in the month of December, and you guys can comment down below what you think. Do you think that the Federal Reserve should justify being less aggressive with, instead of raising interest rates 0.75% or a full basis points, to maybe going back to a half basis points to maybe 2.25%? And this is what we saw yesterday, just so much bullish momentum. Today, things are a little bit different. We are slowing down. The MACD is already beginning to curl back over. It looks like we have a slight resistance right around 2280, and I'm just waiting to see if we continue that same progression, meaning that if the market continues to rally, then great, so be it. But if we actually begin to show some signs of a reversal, then again, not being afraid to short the market, especially leading up to that Federal Reserve FOMC minutes that's going to be released at 2 p.m. Eastern time today. If I'm not mistaken, that is equivalent to around 11 a.m. Pacific Standard Time for those that are on the West Coast. Let's talk about the series of other reports that were released today. We had initial claims being released. They came in at 240K with the previous, or the expectation, being at 226, so definitely worse than expected, which is actually not too bad of a thing, right? This is actually a good thing for the overall market. Now, when it's in the green, that's actually not the good thing, right? And the reason I say that is right now, good news is bad news, and bad news is good news. And the biggest one that I want to talk about is the consumer sentiment report, as well as the PMI prelim. These came in hotter than expected. The same thing with new home sales, came in at 632K with the expectation of 578K. A lot of people are confused of like, well, Ricky, why is that not a good thing? More homes are being sold. 632,000 new homes are being sold versus the expectation of 578. That's a significant difference, right? Yes, and exactly. That is why it's not a good thing. The whole point that the Federal Reserve is raising interest rates is so they can slow down the economy. And think about that. Your goal as the Federal Reserve is to slow down the economy, and imagine the economy still picking up or performing better than expected. This will only justify the Federal Reserve to be more aggressive for future interest rate hikes. So again, right now, bad news is good news and good news is bad news. We want the economy to feel the pressure. We want inflation to begin to go down. That's really the only thing. We want inflation to begin to go down, but everything else, we want it to slow down. We want unemployment to be higher. We want these layoffs to continue to happen. That would be a positive notion for the Federal Reserve, because at that point, then they are seeing that the overall economy is feeling the pressure. It's a very backwards way of thinking, and trust me, I agree with you. But you just have to understand, I mean, there's so many analysts, there's so many news outlets right now sharing opinions about what they think is going to happen. Remember, at the end of the day, it does not matter what they think. The only thing that matters is what the Federal Reserve thinks and what they report, right? The next thing that you need to look out for is today at 2 p.m. Eastern Time. It's going to be the Federal Reserve FOMC minutes. And then up and coming until the next month, we're going to have the new CPI data report and then the new interest rate hike. Those are going to be the main factors that I would be focusing on that will better determine if you should step on the gas for your long-term plays or slow down, right? But today we'll have a better understanding of what the market thinks, and a lot of people are expecting the market to rally towards the end of the year, as it's a very common thing. There's actually an article that I read. I don't know if you guys want me to make a video on it, but something that I can follow up with later about, statistically speaking, there tends to be a end of the year rally pretty often, especially towards the month of November going into December. So something that we'll definitely have to follow up with. Just wanted to make sure that I kept you guys up to date on where the market is currently sitting at. There's no indication of a reversal just yet. It's just signs of it slowing down. So if you're trading today and or if you're invested in the market, it's been somewhat of a slower day, but it's still green, right? And at least a green day is better than a red day. But again, we do have that FOMC minutes that's going to be at 2 p.m. and then the series of different economic reports that were released today that have already been factored into the market. So if you guys have any questions, again, you guys know how to reach out to me. send me a message via Discord, and that's that first link in the description. If you guys, again, want to be able to watch me trade live the next time the market is open, that's going to be that second link down below. And friendly reminder, we are giving away a total of $6,500 cash to 3 lucky winners for those that enroll and learn Plan Profit in between November 14th and November 28th. It's our Black Friday special. We wanted to pick 3 lucky winners, one at $3,500, one at $2,000, and one at $1,000 cash. And we're also giving away another $2,000 cash on the TechBuds Apparel website. So again, if you want to learn a little bit more, click the second link down below so you can enter to win a total of $6,500 profit or cash into your account if you end up being our giveaway winner. Again, appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.